Let me restart this. All right, I need your attention for like 30 seconds. Okay, listen. If you want to make money, if you clicked on this video, you probably suck at trading. Like you suck. Okay, so listen. Take out your notebook. I'm not gonna curse because I heard it's not good for the out. Take out your notebook. Write this stuff down because this is important. Okay, you can make money. I'm gonna show you how to make money. Okay, just write this stuff down and subscribe to me too. That would help. And like you can see my other videos. Okay, watch my other videos too. Okay, if you want to make money trading, I'm the one. Listen to me. Okay. Now, get prepared. Okay, put on your best pair of underwear because we're gonna get into this video, and you better pay attention. Okay. So, first things first, I'm gonna tell you guys what I did today and how badly I messed up. So let's get right into it. First things first, okay? Using my London range strategy, which I made a video on if you guys are interested, I spotted this trade, right? Now, here's the kicker. I actually ended up losing on this trade, and I'll tell you guys why. My entry was dog shit. So I set a limit order. My limit order was set right here at this London low, exactly right here, right? And what happened was right over here, I got stopped out. Somewhere over here, right? And this could have been so easily avoidable. I knew, right, because of my strategy, I knew that we were going to go back up and chase the other London high after we tapped into the London low. But my entry was so horrible that I ended up getting stopped out and losing money instead of making money, right? Which is horrible. It's the worst feeling ever. But I'm just going to explain to you guys how you can avoid this feeling. And the key theme here is patience, okay? It's all about patience. Like, you can see a trade, right? A trade take off, and immediately you get FOMO. You're like, oh my God, I'm about to miss out on this trade. This massive trade. What am I doing? I got to press a button. And that's your human instinct. Your human instinct is, I don't want to miss out on this. This is insane, right? When you should have waited for positive affirmations, right? And I'm going to show you exactly what it is. Now, this isn't like your regular like confluence, like the fair value gap. I kind of use this as my confluence, kind of just tell when there's a shift in market structure. And I'll explain to you guys what it is. So the way that this confluence works for me is I see that there's negative market structure. We get this high over here, we get a lower high right here, indicating that there's negative market structure, okay? Now, the way that this changes for me, the way that this shifts is I want to see a break of structure, which is a candle, an up candle that closes above this up candle, right? Indicating that there's a higher high, right? Kind of that we're breaking the structure from downtrend to uptrend. And that's what I'm looking for, right? And had I waited for this break of structure right here, right? I place a trade right over here, this break of structure, which is exactly what I did. I placed this on my paper account, on my paper trading account, because I don't want to miss out on this trade. I still wanted to take it. Had I waited for this break of structure, I would have been perfectly fine, okay? And that's the biggest thing. The way to perfect your entries is not by predicting the bottom, but by finding where there's a change in market structure, right? And I can go in depth a little bit more about breaks of structure and whatnot. So I'll show you guys right over here, right? Break of structure is so simple, and it's a very powerful confluence too. So let me show you guys exactly what a break of structure is. Okay, so right here we have our high, right? And by the way, when we measure break of structures, we measure it by the body, not the wick. This is the wick, right? And the wick doesn't matter. We don't care about the wick. Okay, it's the body. So right here, right, is our high. That was our previous high. Okay, what price could have done was continue downwards and close below this low over here, which it did, signaling that there was some form of continuation until we break the structure, or we continue, but we then break this structure, which means that we have a candle, which we broke structure on this candle. We have a candle that closes above this candle, right? This candle over here, the one before this big move up, does not qualify for a break of structure, because if you realize, you see this right over here, this candle is closing below this, right? And that's one of the ways that I find a shift in market structure. Another way you can find a better entry is wait for that retracement, okay? You see these wicks over here? You see how how they go so deep, or like they're pretty big. They're pretty long wicks, right? And what you're probably doing, right, is you're seeing this big run and you're going, oh shit, I got to place my trade because look at this, right? And then you end up placing your trade somewhere up here. It wicks out to the bottom, and then you end up getting stopped out along here, right? What you can do instead, which is hard, incredibly hard, and I know it is. Like, it's almost impossible, but you need to wait for a retracement. The worst thing you could do is see a big run and place a trade, because odds are if there's a big run already happening, you've missed out. Like, you're done. Like, your chance to get in on that big run was a while back, okay? And you can get lucky. Like, there's times where you can get lucky and you caught it just at the right time, or it prolongs for a large amount of time. But most of the time, like, you could have gotten lucky here, right? You could have seen this run over here, place a trade over here, and caught this trade, right? But when it comes to risk, if you're placing a trade over here, you've already missed out on not only a large amount of money, but now, let's just say you place a trade right here. Look at this. Your risk to reward is horrible. Like, this is horrible, right? If you're going to try to place a trade at the top of this, don't even bother. Wait for another setup, or it wasn't your day. Turn it off and move on to the next day. But yeah, those were just some points I wanted to go over. If you guys have any comments, questions, anything you want to ask me, leave it down in the comments. I'm going to answer every single one. I'm a small channel, so I prioritize you guys, and I prioritize answering your questions and helping you guys out. You know, odds are if you clicked on this video, I might know more than you. So feel free to ask me any questions. And if you guys want to debate about anything, I don't know, like, just whatever, just comment and like subscribe too, because that helps out. But yeah, guys, I ended up losing, I ended up losing like $1,000 today on the funded account, which really sucked. Like, really sucked, because I'll tell you exactly what happened. I mean, I already told you guys earlier on in the video, but I placed my trade right here. And I went into like $1,000 of drawdown, and it took me out of the trade. And I caught the paper trade, and it was $800 on this, like on this big move, and that would have been so good. But it's okay. You win some and you lose some, and that's all a part of the game. But if you guys want to learn how to catch these types of trades, like I just did on my paper at least, then for sure watch my other videos where I explain this exact like strategy, the London range strategy, which is super powerful. Like, I mean, I've noticed that this has worked for me over the past 2 weeks. And a common theme, though, in a lot of these strategies is that they'll come and go. At least that's what I've seen. You'll notice things repeat itself in the market, but they come and go. And I don't know if that's just because I haven't been trading for too long, like a lot of other people have. But it seems to me like there's really no long-term like strategies. Strategies more or less just are made like during the week even. Like there's been times where like I'll see the same exact thing repeat itself like 2 days back to back. Like there'll be this one weird thing that happens this one day, and then the next day, or like for the next week, it just repeats itself, right? And that's what I noticed. That's how I noticed the London range, right? I noticed that, like, I watched ICT videos, like, mark out your London ranges, and I was like, oh, okay. Like, I don't remember if he explained how this would happen, honestly. Like, I might even have discovered it. Odds are I didn't. But I don't know. Like, I marked them out, and then I noticed, like, oh, well, when we're within this range, it tends to sweep out the low and then take out the high, you know? And it's been working for a bit, but who knows? It might not work for much longer. We'll see. But yeah, if you guys, I was like prolonging this end, but if you guys enjoyed the video, make sure to do all that good stuff and whatever. But peace out, guys.